Dr. Lakshmi. I am an assistant professor and head in the Department of Commerce, Acharya Institute of Graduate Studies, Bangalore. I am doing this video for the purpose of participating in RSRI Best E-Lecture Award 2022, which is being organized by REST Society for Research International. And for making this video, I have chosen the topic insurance claims, and insurance claims is one of the most important concept which comes in financial accounting. So first let us see what is the meaning of insurance claims. See, whenever a company wants to do its business, it can't say that it doesn't have any risk. Every company will be having its own risk. It may be either internal or external. Here insurance claims are one major thing which is available to the companies so that they can do their business by insuring their asset or stock, so that if any risk is arised, they can recover by claiming with insurance companies. So when it comes to financial accounting insurance claims, there will be two types of loss which will be recovered, where a loss in terms of stock and loss in terms of profit. Especially when it comes to purpose of calculation, will give importance more when the loss of stock which is happened or loss of goods which are lost by the company. So when it comes to insurance claims, here especially, or I am going to take only the consideration of fire insurance. So fire insurance is a legal contract between insurance company and the policy holder, which guarantees that any loss or damages which are caused to policy holders property in a fire will be paid by the insurance company. So when it comes to the meaning of insurance claims, it is a contract between two parties, majorly the person who is seeking insurance and the person who is providing insurance. So we can say it is a contract between insurance company and the insurer. And for what purpose they will take the insurance? To safeguard or to recover from the losses. And especially here it is purely for fire insurance claims. So when a company wants to calculate what is the amount to be claimed with the insurance company when the goods are lost by fire or the stock which is being lost by fire, the company accounts should be maintained under 5 different steps. The steps or the process which includes the calculation of insurance claim are: first one is preparation of trading account, that is last year trading account, to calculate the gross profit. Second step is to calculate the rate of gross profit, and third one, preparation of memorandum trading account to know the closing stock of the company, especially the stock till the date of fire. And fourth step is calculation of actual loss, and finally the calculation of amount of claim which is to be claimed with insurance company to recover from the insurance company. So let us see one by one step, and in this particular video I am going to explain the steps only in terms of theory. So we will go with the first step. First step is all about preparation of last year trading account. The data will be given as per the data we are supposed to prepare the last year trading account, and the last year trading account will be prepared to identify the gross profit which the company earned in the last year. The main purpose of preparing the last year trading account is to identify the gross profit of the company. And as we know that the trading account is prepared to calculate the gross profit of the company, where it records only the informations which are related to trading. So when it comes to the debit side, we can say opening stock, the stock which is being holded by the company when the academic year started, financial year started, and the purchases outwards. So we have certain things which comes like opening stock, purchases, and we should know our actual purchases or net purchases. Net purchases is none other than purchases minus purchases returns or return outwards, then wages, carriage inwards, freight inwards, cartridge, and in the credit side we should write the income that comes to by sales. Again we want net sales. Net sales is all about sales minus sales returns and closing stock. Here in the format it is being mentioned gross loss in the credit side and gross profit in the debit side. Suppose the credit balance of trading account is greater than the debit balance, then the difference between these two will be considered as or will be called as gross profit. If the debit side balance is greater than the credit side, then the difference between these two will be called as gross loss. And whenever we are going with the first step of calculation of gross profit, which is required to identify the performance of the company in the last year, because based on the last year gross profit only we can start with the second step, or we can start with the evaluation of amount of claim. So this is a first step. Second step is all about calculation of rate of gross profit. As I said in the first step 1, step 1 is prepared to calculate the gross profit of the company by using the informations available and related to trading account, that is the difference between purchases, sales, wages, opening stock, closing stock and all. We need to identify the gross profit. So once the gross profit is calculated or identified, then we should go to the second step. Second step is all about calculation of gross profit ratio. So gross profit ratio is a ratio between the gross profit and the net sales. Again, the net sales is all about the sales minus sales returns. Sales minus sales returns is considered as net sales. So how to calculate gross profit? So gross profit ratio. Gross profit ratio is equal to gross profit divided by net sales into 100. See, whenever we are representing the ratio, it is identifying the relationship between profit and sales, it should be represented in terms of percentage. So it will be multiplied with 100. So this is the second step, where based on the value of gross profit which we have calculated in the step 1, we can calculate the step 2. So here when it comes to the calculation of amount of claim is based on 5 different steps, and again if we have done any mistake in the step 1, it is going to impact on even till the step 5. So if the gross profit is wrong, then gross profit ratio also will become wrong. If the gross profit ratio is wrong, then whatever the item or the value which we are going to calculate in the third step will become wrong. If the third step value is wrong, then fourth and fifth also will become wrong. So we should be careful when we are preparing each and every step. In the process, there should not be any mistakes in the each and every step. So this is about second step. Again in the second step, sometimes the companies will provide or the companies can use last 4 years or 5 years gross profit, and they can calculate the average of gross profit for 5 years, and they can use even that rate of gross profit also to calculate the amount of claim. This is step 2. Step 3 is about memorandum trading account. There is a major difference between trading account and memorandum trading account in terms of preparation, in terms of identifying the values, not the format. See, the format for trading account and memorandum trading account is same. There is no any difference, but the value which we consider between trading account and the memorandum trading account is trading account will be prepared for the last year, like for example from 1/4/2020 to 31st March 2021. But when it comes to memorandum trading account, the memorandum trading account will be prepared from the beginning of the financial year to till the date of the fire accident when it is occurred. For example, the financial year started from 1/4/2021 and the fire accident is occurred on 20th July 2022. In the sense, will prepare the memorandum trading account from 1/4/2022 to 20th July 2022. That is till the date of fire will prepare the trading account. So the difference between trading account and memorandum trading account is memorandum trading account is prepared till the date of fire from the date of beginning of the financial year. And as it comes to preparing of memorandum trading account, the main purpose also differs from trading account. Trading account is prepared to identify or to calculate gross profit, but memorandum trading account is prepared to identify the value of stock or value of closing stock till the date of fire, that is on the date of fire or before the date of fire, what was the value of closing stock. To identify this, we will prepare memorandum trading account. This is the step 3. Then step 4. Step 4 where it is a step in which we will calculate what is the actual loss incurred by the company, because when certain goods are there in the company and the stock is being lost by fire. For example, I have kept 10 books in a shop and due to fire around 7 to 8 books are completely burnt and it is not in a position of selling. Some remaining 2 books out of 10, 2 books are in a position to sell, which means 2 are recovered from fire. We'll call it as salvage value. Whenever we are saying that certain goods are lost by fire, sometimes the companies can save certain goods from the fire accident. So, those goods can be considered, or the value of those goods will be considered as salvage value, and that particular salvage value we are supposed to consider in the purpose of calculation of actual loss. So, actual loss, how we can calculate? This is a format which I have been mentioned over here. Value of the closing stock on the date of fire. From where we will get this? We will get this one from the memorandum trading account. So, from the memorandum trading account, we will take the value of closing stock, and from that we are going to deduct the salvage stock or salvage value. So, salvage value of the stock we will deduct. So, after that, if any expenses which are incurred by the company to fire extinguisher. So, for any expenses which are incurred at the time of fire extinguishing should be added and it should be recovered from the insurance company. So, we are going to deduct the salvage value and we are going to add the fire extinguisher expenses. So, if we do these steps, we will get the actual loss which is being incurred by the company by the way of fire accident. So, the last step, so I know now what is my actual loss. So, when it comes to the last step, the 5th step, amount of claim which I am going to claim with the insurance company. So, when I am going to claim the amount with the insurance company, there are 2 chances or 2 possibilities. One is when the problem provides the information about insurance policy. For example, I have my shop and I have insured for certain amount, which means I have the information that this is the amount which I have given for an insurance policy. If the problem provides the value of insurance policy, then we have to go with the A, category A, where if insurance policy is given, we have to use or will consider it as average clause. So, under average clause, the value will be calculated by using insurance policy into actual loss, which we got in step 4, divided by closing stock on the date of fire, which we got in the step 3. So, we will identify what is the average clause and that particular amount will be considered as amount of claim. This is case 1. In the case 2, for the purpose of calculation of amount of claim, sometimes it is difficult for the companies to identify or to know, or in the problem they have not given the policy value. The policy information or the amount related to policy has not mentioned in the problem. If it is a case, then we will consider as the actual loss incurred by the company will be equal to the amount of claim. For example, actual loss is 10,000, then the 10,000 should be claimed with the insurance company. See, whenever a company is having certain goods in its stock and it is being destroyed by fire, especially destroyed by fire, in the sense the company can go for claiming insurance, and when it goes for claiming insurance with the amount with the insurance company, it has to prepare an account. We'll call it as insurance claims accounting, and from this they can produce the accounts to the company and they can claim the amount. This is all about this video. Thank you. Have a nice day.